Market Shots are short video segments designed to help you develop a trading strategy that you can stick with. Here to help you is the Chief Market Strategist for the Market Guys, A.J. Monty.
Well, if you've ever wanted to learn how to trade gaps, then this is a good place to start. I thought I'd take a few minutes to show you first what a gap is, and then the behavior patterns behind the gap, and lastly, how to trade the gap while protecting yourself along the way. Let me first explain to you what a gap is. In this case right here, you see this stock is showing a green candle on this particular day, but the very next day, the stock moves lower than the previous day's close or low. So what you have here is a space on the chart that is basically a void where there is no price action. Now, usually a downward gap in this case is driven by a negative news item, or maybe a downgrade by an analyst or something that is more negative in nature and driving the price down. Now, the interesting thing about a downward gap is that it's usually driven by the fear emotion, and sometimes the downward gaps are more dramatic than the upward gaps. In this example, as you'll see in an upward gap right here, the stock had a red long shadow, almost a hammer pattern here, and then it gapped up on good news. So this here is a space that's almost equal to what we saw in the previous down gap. So here's a down gap, here's an up gap. Now, remember what I said before, the gaps are usually driven by emotions. So what I usually wait for is, I wait for the emotions to kind of bleed out of the market before I decide to take any action. You see, the interesting thing about gaps is that they generally fill. Fill meaning the stock will generally move back to the place it once was before the gap, and therefore filling. So here's what happens. The negative news comes out, and those who are right on top of the market basically take action against that news, driving the price lower. But the news, again, tends to lag, and the procrastinators seem to wait before they start selling on that negative news. You see here, over the next 4 days, the stock continued a little bit lower. Now, generally, the stock will continue lower from maybe 3 to 5 days before it starts to reverse or form a bottom to go back up. Now, it's in a downward gap, 3 to 5 days. Again, comparing that to the upward gap, you generally have the same thing. In this case, good news comes out. Those who are right on top of the market tend to buy into the market on that good news, and then the procrastinators will wait a little bit more. They'll buy in, then some more will buy in, and by the last procrastinators, they're a little bit too late, and the stock will generally start to pull back. So in this case, you have day 1 is the gap, day 2 further, day 3 a little bit higher, day 4 we hit a high, and then we start to come back down to fill that gap. So what I normally do in a downward gap, I'm going back and forth here, but just to compare for you, I usually wait 3 to 5 days before I start buying with the anticipation that the gap will fill, and then what happens is once the gap fills, I'll generally get out. Filling is a term where if you take a look here, you have a line, I'm just drawing right here, from this low, you'll notice the gap forms, and then the stock moves higher, filling the gap. The reason many times the stock will reverse from that gap filling is because many traders use the gap as a target. Once the target is reached, they get out of their long positions and close their positions. Now look, if you take a look at this upward gap, you have the gap here, 1, 2, 3, 4. This is where I'd start to take a short position, and then my target will generally be in this gap area, so I would generally get out right around this area right here. Now, there's a lot more to learn about gaps. This is just a start. Now, I want to tell you that my alert service, the trade alert service that I have in both the equity oracle and the options oracle, are many times focused on gaps. I love gaps as a target. I love to initiate trades based on the gaps because there's so much emotion and volatility around them. So what you might want to do is take a look at the subscription that I have. It's very inexpensive, and what I have to do is just make sure that I'm making more for you in profits, or at least helping you make more in profits than what you're paying in a subscription fee. So take a look into that, and we're going to have a lot more discussions in our open house Q&A sessions with the market guys. When you are learning about gaps live on such a session, you'll be able to ask me questions and even give me your stock symbols so that I can look at them for you and give you my opinion. So for now, take a look at these gaps, make sure you keep your stops in place, and have a great trading day.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.